We are going to create a portfolio in Investopedia Simulator inside of a game. This will allow us to keep track of some stocks, index funds, and options. Investopedia Simulator. It should come up like this. Click on Stock Market Simulator. If you have not yet created an account, you need to create an account. It will need to send a code to your email address. So select one. And if you need to do that right now, go ahead and do that. When you click on register for simulator, you put in, an email address, a username. I'm just going to sign in because I already created an account. And then it's going to send you an email if you've created your account, and you just need to type in the code. The code changes every time, so there's no reason for you not to be able to see what my code is this time. And it should look something like this. I'm going to get rid of this at the top here so that you don't need to see all this extra stuff. And what we want to do is we want to enter a game. So you're going to click on games, and you're going to go to join a game. And for example, if you were in my first hour class, you'd go to OHHS. And it comes up with first try one. Okay. And you can see how it says join game. Okay, so we're going to go to the game. This game has already been set up in my class. You'll notice there are ads in here. You'll see a little list here that shows different portfolios if you have different portfolios set up. In this current game, there are 21 players, so we should be up to 29. And we've already purchased some different stuff in here. I'll just review what we've already purchased. We bought 1 share of ExxonMobil, XOM, 1 share of VTI, which is an index fund that tracks the entire US stock market, 1 share of NVDA, which is a computer processor company, 1 share of Carvana, which is a automobile sales company, 1 share of CMS Energy, which is an electric company in Michigan, and 1 share in BND, which is a bunch of bonds in the USA. About half of them are government bonds and about half are corporate bonds, I believe. But I'll show you exactly how to buy these. So to buy, you go to trade. Sometimes trade is at the top, sometimes it's at the bottom, but you click on trade. Right now I'm recording at 8:48 in the morning, so the market doesn't open until 9:30. We're going to look up a company and we'll just go through a couple of the basic ones. So to just buy a single share or shares in a company you like, you just have to figure out the name of the company. With Exxon, you can just type in Exxon and it comes up. Now the reason I'm selecting this one is not because I like Exxon, it's just because every 3 months, if you have a share of Exxon, you get a little bit of money, which is called a dividend. Now, we're going to take a look at the moment yesterday at the close. It says at 4 o'clock yesterday, November 4th. I'm recording on November 5th. The last trade or the last purchase was $114.14 for a share or maybe many shares of ExxonMobil. From the start of the day, that was up 38 cents, which is 0.33%. As of 8:32 this morning, That was 15 minutes ago. It looked like it was going to start trading today at $114.27, which is up just a little bit from yesterday. And there's some other information in here, like how much volume, how many shares traded yesterday, what yesterday's high and low was, the difference between the bid price and the ask price, which was only a penny, how low it's been in the last year, 52 weeks. So it's been as low as $97.80. How high it's been, $123.31. So the sale price or the trading price of this has went up and down. We can look at different graphs. Like yesterday, it started down, and then people started selling it for higher and higher, buying and selling, right? If we look over 3 months, we'll see that the price has been up and down quite a bit. If we look at 5 years, we'll see that the price of ExxonMobil has went up from about $30 a share to over $100 a share. So if somebody bought when it was $30 and they sold when it was $100, then they made a $70 profit per share. All right, so we want to buy one share. So we just go down to buy. Of course, we could buy or sell. We're not going to do shorts and we're not going to do buys to cover in this activity. So we're going to buy one share. And we want to buy it immediately when the market opens at 9:30. And we only want to buy it today. So we're going to preview our order. It says stock buy at market, open, ExxonMobil, one share. Today only. The estimated price is $214.14 for the one share. We'll be charged 99 cents or $1. So our total charge on our account will be $115.13. This particular game is set to start with $100,000 as a game. We're going to press submit order. It's going to say trade confirmation. Buy market order for XOM has been received. You'll get an email that was said the trade was opened. Okay, so let's buy a second one. This time we'll buy a share of NVDA. Now today, on Wednesday, November the 5th, 2025, NVIDIA, yesterday, let's see what happened yesterday. Yesterday, the sale price of the NVIDIA shares went down by almost 4%, 3.96%. So the last share sold yesterday was $198.69. Now today, it looks like that's going to be up a little bit, 51 cents more expensive. In the last 52 weeks, it's got as high as $212.19, and it's gotten as low as $86.68. Oh, so let's look at the 1 year chart. Oh, also let's look at yesterday's high and low. So it was almost up to $204, but then it dropped down to $198. So that's a difference of $6. In other words, that's where that about 4% came from. Well, it was down $8. It says it was down $8.19 yesterday. So we're looking at the 1 year. You can see that the price per share was as low as $94 on April the 3rd, and it was as high as $207 on October the 28th. If we look at the 5 year, we'll see that before about 2003, the share price was only around between about $12 and $30. And if we look we go back, it appears that the prices were very low, like just a few dollars per share. But then it got more and more expensive, okay? Or you could say more and more valuable. So let's buy one share of this. And let's do, instead of doing a market order, let's do what's called a limit order. Okay. A limit order allows us to say how much are we willing to buy it for. So maybe we're only willing to buy it for $199. Then, because right now it's a little more than that, and a lot of times the prices will go up and down during the day. So we could put in a limit order for $199. That's good only for today. That would be between 4:30 and, 8:30 in the morning and 4 in the afternoon. And then the trading platform, Investopedia, will wait until the price goes down to $199. And then if it does, it will buy the one share. If it doesn't go down, it will not buy the share. So we'll click on a preview order. You'll see it says buy at limit, NVDA, one share. Our limit is $199 just for today. The price for that's $199 with a commission of $1. So we'll actually pay $199.99, almost $200. We submit our order. That order is going in. It's 8:56 a.m. So that order will happen in 34 minutes from now. All right. Now let's look at options. Options, you might have more stocks that you're asked to add to that, or you might have, and let's take a look at some that would be good. So for my class, this is the ones that we are looking at right now. Again, it's early November of 2025. So buying shares in ExxonMobil, NVIDIA, Carvana, 3 index funds, a VTI, which is all U.S. stocks put together in one fund, BND, all U.S. bonds put together in one fund, and VGLT, LT for long term, and that's bonds in U.S. treasuries that are like 30-year bonds, like the really old, long bonds. GLD for gold shares, like in gold itself. LAND for land. DE for John Deere. And ADM for Archer Daniels Midland Company. So those are ones that we're looking at. We're also looking at some options, and that's what we're going to do next. So here we go. To buy an option, you have to click on trading, of course, and then options. What an option is, it's a bet that something is going to go up or down. Okay. And there's lots of reasons you might want to bet that things are going up or down, especially if you own something and you're afraid it's going to go down, then you would probably want to buy an option, and that way you can protect the price. So the one we're going to look up, again, because it is November, early November in 2025, we're going to look up the regional banks. So this is an index fund, KRE. It's called SPDR Series Trust State Street SPDR S&P Regional Bank ETF. We're going to select that one. It's going to say State Street SPDR S&P Regional Banking ETF. And it shows that yesterday it closed at $59.82, which was down 32 cents or 0.5%. Today it looks like it's going to open at $59.92, which is up 10 cents. We'll see that there's a dividend yield. It pays a dividend every 3 months of about 2.6%, so that's pretty nice. We could show a performance chart if we want to. We can see how it goes up and down. So looks like it's gone up and down. It's been as low as, looks like $22, $19. $18. And right now it's selling for $59, almost $60. It's been as high as $74. Okay, so what we're going to do is we're going to bet this is going to go down. Now, this is very, very risky. We're probably going to lose the bet, and we're going to talk about that. So this is an option. And we're going to do one particular strike price and one particular date. The reason these are selected is, number one, because we don't know that it's going to go down right away. So we're going to select a date that's a long time from now. So you can close November the 7th if that's open. We're going to choose January 15th. And again, this is just for watching. Okay, this is not investment advice. I do not know that this is going to go up or down. And if you were actually to buy a share in this, you're probably going to lose all the money. Okay. All right. So right now the share price is $59.82. We could buy a call, which is a bet that's going to go up in value, or we can buy a put, which is a bet that it's going to go down in value. Okay. It shows us how much interest there is. You can see there's a lot more people that are betting it's going to go down than people that are betting it's going to go up. So that's a good sign, I would say. Again, we're looking at January 15th. You'll see that there's different prices we can buy at, but in particular, it's only showing us the three that are just less than the 59 and the three that are just more than the 59, 82. So we want to see all of them. So we have to scroll back up, and you'll see it says view near the money. And if we click on that, it talks about strike price. When we click on near the money, we'll see there's several choices: near the money, in the money, out of the money, and all. So we're going to do all. Again, this is up near options expiration date. Now we're going to go down back to January 15th of 2027. And we're going to look at $45, and I'll show you why we're looking at $45. We're looking at $45 because there's already 10,947 bets made at this $45 level. And that's as I'm watching this just now at this moment. Okay. And if we look closely, it says volume. That's how many of these bets were made yesterday. So 56 were made yesterday. There's some people that want to sell these bets. They don't want to be in the bet anymore. They want to sell them for $5. There's some people that want to buy the bets, 97 cents. But this is from yesterday, so those numbers are not really real. The last bet that was made was $2.39 per share of KRE. Now, when you're making an options contract, you can't do one share. It's got to be 100 shares. So you multiply this by 100, that would be $239 approximately. And that was up a little bit yesterday, 28 cents. So we're going to select right here. I'm going to zoom in on that so we can see. Again, we're at the $45 strike price. We're in the January 15, 27 contract date. And we're going to click right on this number here, whatever it is today. It's next to the 45. And it's going to look like this. It says select the contract. The symbol is KRE. The contract is KRE for 2027. 15, I imagine that's the 15th day. M, I'm guessing that's for January. I don't know why it's M. 45, because 45 is our strike price. It's a put. That means we're betting it will go down. So we're going to select this contract. It's going to have us confirm. So you might have to scroll up. It should say the same thing, KRE 27, 15, M, 45. It'll say what the last price was. It'll say what the last bid was and the last ask was, how much it changed yesterday, what the volume was yesterday, how much interest there is, what the day range was yesterday. So it traded mostly between 234 and 239. Everything over here looks the same. How many of these do we want? We just want one. Okay, so just select one. You can use the up arrow, I guess, to select one. And we want to buy it right away when the market opens, or, and we'll do this next, we could do a limit order. Okay, and I'll show you how to do this. So market, day order, and in fact, let's do a limit order because I don't want to buy it for $5 if I should be able to buy it for $2.50. Okay, and right now there's somebody willing to sell it for $5, so we could buy one for $5, but why do that? Let's put in a limit order just for today. Let's say we're willing to buy it for, the most it sold for yesterday was $2.39, so let's say $2.50. Again, that's times 100, so 250. So let's click on preview order. So we're willing to pay $2.50 times 100. You can see it's $250 plus there's a commission. Okay, again, there's the 100 right there, quantity 1, 100 options per contract. We're going to submit our order. It says the order was received. It tells us exactly what it was that we ordered. Now let's do one more. So let's click here. Yep, and there's the email that we made our order. Now this one is a very unique one. This is one called SOXS. Now this one is challenging to explain. So what this does, it's called the Direction Shares ETF Fund. Direction with an X, daily semiconductor bear 3-time share. Okay, so it would probably take me too long to explain it in a great deal of detail, but the general idea is this, that as the share prices of semiconductor companies go down during a day, that these shares will increase in value about 3 times as fast. So at the end of the day, at 3 o'clock, 4 o'clock, they will be worth a lot more, and then somebody could sell them and make a lot of money potentially. Oh, we should talk about losses also. On that previous one, we would lose the whole $150, right? If the bet doesn't work by January of 2027, then we lose the whole $150 or $250. So that's what happens when you're buying a put like this. So for this one, we're actually going to buy a call. Again, it's called Direction Daily Semiconductor Bear 3-time shares. The whole point of this is to be a bet that the semiconductors which are used inside of chips, like memory chips and processor chips, that those companies, the value is going to go down. So which one are we going to look at? Well, we're still going to look at January. So let's go ahead and close November. We're going to want to look at all, so we can do that right now. Yesterday it was at 265. It was up 11%, 38 cents, which is pretty impressive. Okay. So we're looking for January 27. We're going to look for a strike price of $10. And we're looking for calls, which is on the left-hand side, not the right-hand side. So $10. Let's see how much interest is in that already. It says there's almost 3,000 of interest in there. The price was $1.15. Okay. All of these should be the exact same link here, so it doesn't really matter which of these you click on. but make sure you're clicking on the left-hand side. So our bet is that this share price is going to increase, and it will increase 3 times faster than the semiconductor industry loses value. Okay, so this is like the bettiest bet we can make. It's leveraged, which means it has the 3 times. Let's double check it. SOXS for 27, the 15th, A, and $10. And we're gonna actually want the buy to open. Oh yeah, select contract. Let's make sure it says buy. Oh, there it is. We want to buy one of these. Okay. Let's see what the prices were yesterday. $1 to $1. Well, right now people are asking to buy one for $1 at the end of the day yesterday. People were willing to sell for $1.32. Again, times 100. 106 of these sold yesterday. That's good news that there's actually people buying and selling these. The open interest is 209.97. Let's limit our order for this. So we're going to put a limit order on, and if the last price was $1.15, let's say $1.20. That's pretty close to the 132 that someone is willing to sell theirs for, at least yesterday. So 120. And of course, you may need to adjust yours. And again, here's how you would adjust it. You would look really close and you'd be like, okay, the ask was 132. So if we put in 130, pretty sure we're going to buy it. Last price was 115. So usually you look at the last price and you look at the ask price. And somewhere in between there is usually where you can get the contract. Okay. So that's why we put in $1.20, because that's between 115 and 132. If we wanted to be more sure, why don't we change that to 125? That's even closer to the ask price. It's not that much of an increase. The difference in the contract is $120 versus $125, so it's only a $5 difference, but more likely to get filled right away. So we're going to click preview order, double checking it. We got our estimated price, 125. We're going to have a commission of $1.24, so we're going to add that, 126.24. Now, again, let me emphasize this. Most likely, this money is going to be lost. Options are very much, did we do a call? Yeah, we did do a call. Options are very much like bets or insurance. They could be insurance. Suppose you had a lot of semiconductor shares and you're like, I'm worried about it going down. I don't want to sell them. I'm going to buy this little bit of insurance. And if this direction share goes up in value, this SOXS, if it goes up in value, then I'm going to be able to sell this call for more than $1.24 times 100. I might be able to sell it for $1.50 times 100. Okay, so that's $150 minus $126.34. So that would be $23.76, right? But what if it goes up to $2, right? So that would be 200. That would be $74.76, $73.76. So you could think of this as insurance. You could think of this as just making a bet, but we know our total loss, and that's what we want to know. And we have to be willing to lose that is $126.24. So we're going to submit our order. It should say our order is in. We can check our order status here, and it should show us our orders that are pending. Okay. Notice that first ExxonMobil, we didn't put a limit on it. We did put a limit on the NVDA, on the KRE, and on the SOXS. Okay. It'll say these are stocks, these are options. Let's take one more look at our full list, because this is the list, if you're in my class, that you need to put in. So again, we already have 2 of those options in. We're also going to try 3 other ones. ALI is just a company. UUP is the US dollar bill. This is a bet that the dollar bill will become more valuable to people. IYR, this is a bet on real estate becoming less valuable. Notice these are all January 15th, 2027, because that is a year and 2 months from now, 14 months from now. These were selected very particularly because of their Greeks. And again, this is not financial advice. These things change daily. And this is being recorded, a day after I looked at this stuff closely, actually more than a day after. So this is not financial advice. I do not know in which direction it's going to go. The main reason we're doing this is to watch them and to see what does happen. And so we can keep track of the news and see what's going to happen. Again, we've got on this side all our stocks and 3 index funds. On this side, we have 5 different options. And that gives us a nice selection of 15 different things we can keep an eye on. All right, thank you very much. I hope this was clear and straightforward. And good luck. And hopefully by buying this portfolio, you will find some very interesting things that happen as some things increase in value and as some things drop in value over the next number of days, weeks, months, and even years if you pay attention to it for that long.